So it's been a good week. Pretty crazy day today. Just everything was red today. Even the metals finally were having a red day, but they're actually bouncing quite a bit now. So this is the part where like metals really start to get extremely silly, especially when they're doing these kind of pullbacks. Didn't even get under mid vamp and already reversed. That's where you start trapping shorts, and this is when you get into that short squeeze territory. If we weren't already in there, even more so after moves like this, where it just keeps going. And I don't know when this is gonna stop. It will at some point, but yeah, this is about to get really silly.
Yeah, so I think that the most important thing here is that you realize like one of two things, right? So if you're long gold already, it's very different than if you're looking at gold now, I think. So like if you're coming to gold now, it's a completely different story. If you're long gold already, the play has been simple. Just ride it, let mid vamp be your stop. And as long as that holds, price will, squeeze higher. It's essentially set up here. I mean, you look at gold today, gold has had an 8% high to low day. 8% on, that's massive from peak to trough on gold in one day, 8%. And I think, and this is with gold finishing the day flat 27 basis points or GLD. So I think you've essentially trapped a lot of shorts here today that either are going to be tested or are going to be steamrolled higher. So in the sense that, look, one of two things are going to happen here. Either those shorts are going to get vindicated where price can't break above today's high tomorrow and price fades lower, feeding into the short positions, or they're all trapped and they're about to be squeezed and tomorrow we're going to print another all-time high on GLD.
Which
I think that's
seems
the
to
setup.
be seems to
Yeah,
be
it
what's
seems to be
setting
the
up.
case. Yeah, I think the wick is too big here, to be honest with you, for this to just roll over overnight. But we'll see. I mean, you could look at silver, right? So silver is another thing. This was supposed to be the blow off top candle on Monday. Price was down after hours at like 92 on SLV. Moved up overnight, opened up pretty much almost unchanged from the prior day, and squeezed higher. Same thing today. Now the question is going to be, do we rotate higher? I'd assume that a lot of shorts have gotten smacked up here in the last 4 or 5 days on metals because um, these moves look exhausted, but at the same time, I think that there's this weird dynamic where there's not a lot of them right in precious metals in terms of number one. There's not a lot of them to trade. When meme stocks are ripping, there's a million different meme stocks. So everything like in the metals trade is basically isolated to the two main players, gold and silver. And I think that's what's getting a lot of attention and creating like a very persistent bid for those that are marginal buyers and those that are getting squeezed out. They're forced out of one. They're not short a basket of stocks. They're short one, right? And they're going to get squeezed out and rotated higher.
Yeah, and a lot of people are saying this is the debasement trade. This is everyone getting away from America and getting away from the US dollar. Everyone's buying gold. But if that were the case, wouldn't we be seeing bonds selling off? Wouldn't we be seeing the dollar down 50% by now? So
Yeah.
it's
So
definitely gotten to the point where this is speculation. And when it's speculation, it can go a lot higher, a lot faster than many expect, and it can go down a lot faster than many can expect. So when speculators have control of what's going on, it tends to not make sense when you look at it from an actual macro perspective. It doesn't make sense as a debasement trade. That's not what this is.
like I think the simplest way to look at this is say the 30 year. Look at the 30-year yield, the longest duration we have in America, right? And for it to be below the 2023 highs, just sideways, just grinding along sideways, tells a lot. It's a good explainer because if this was a true flight risk, like if this was an American flight risk where everyone was dumping US dollars and it was the end of the American financial system, bond vigilantes would be in control. I would bet that in an environment like that, the 30 years at least above 5%. At
Well, I mean,
least.
what we saw that on Liberation Day. That was probably the
Yeah,
closest
we
we
did.
got to that.
Yeah. And sure enough, we're still at post Liberation Day levels. Like we're not much higher than when Liberation Day went down on the long end.
Yeah.
So
Meanwhile, metals are 2 or 3 times
now,
higher.
yeah, now obviously, like this is macro is a bit complicated. We can't just look at the dollar or the rates and say, oh, they're not moving. There's no debasement. So I think the concern here is two things. Number one, the dollar is not a symmetrical index, meaning like if the dollar here's what I mean. If the dollar is not below the 2021 lows, it doesn't mean that there isn't debasement occurring. Because the dollar is a relative index. It's not it's measuring its relation to other currencies. So what you can have in what can be a scenario is you have a global path of debasement where all currencies debase in proportion. And in that environment, gold would be able to outperform or run laps around um, the dollar's chart in the sense where the dollar's not necessarily falling as much, but globally currencies are debasing at an exponential rate. Meaning, let's just say if the dollar debases massively, but then the euro debases even more, the dollar chart DXY is not really going to go down too much. They're just going down. It's symmetrical, right? And in an environment like that, gold may skyrocket. But the problem with this is you're not seeing the correct attributes flow across other U.S. dollar denominated assets. Like for example, if you look at SPY is up, but it's not necessarily melting up as it did in the 1980s when SPX was ripping in the 1980s when there was massive inflation. It is not doing that until the Fed obviously raised rates. It's not doing that now. So I think that there's this common misconception where everyone's looking at gold and saying the financial system or the financial system's collapsing, and it's leading into this. It's forcing a repetitive cycle where people are basically having higher confidence to long these metals on the idea that there's something that's about to break. When in reality, I don't think that these metals are signaling a crisis. If anything, I'd be more concerned that you're amidst essentially a precious metal bubble that you can tell started with gold over the last year or two, spread to silver, and now to a lot of these other industrial metals. And even copper today wasn't immune. I mean, copper like ripped up quite a bit and faded throughout the day. But these are all metals that are moving, I think, in tandem. And when you look at things like agriculture and other commodities, they're not necessarily having the symmetrical melt up. Stocks aren't, agriculture isn't. Even oil is trying to bid, but I mean, even if we unadjust the price, like oil, this, everyone's saying this is going to be the next move. What's going to happen is people are going to rotate out of precious metals and into oil. But again, does this look like hyperinflation? At least not yet. But the problem is the difference, right? A lot of these other indicators are not signaling massive debasement. But then if you look at gold and silver, they're signaling massive hyper debasement. So there's a disconnect here. It's not like gold's rallying slowly on a steady trend. Like you're in this upward arc of what seems to be a melt up phase that's attracting a lot of attention. If it's through shorts, if it's through options, whatever it is, people are getting, I think, a little speculative on the metals. So the key here is to pay attention to price. If price is going to continue to melt up the way it is, use mid vamp as a stop loss. Price should not get, if price gets back below mid vamp, the odds of melt ups being over are rise significantly. So if price can hold mid vamp, it should melt up. Melt up should continue. If not, you have to worry about the top being in at least for some time.
Yeah. At this point, I feel like gold, if let's say we got a recession in February or March, I feel like gold at this point would not be a recession hedge, whereas a lot of times it is. I don't think this has safe haven status anymore.
Or at least for the time being,
Yeah,
right?
for the time being,
I,
but at these levels, if a recession
Gold's done
hits,
this before, though. Gold's done this before. It's melted up, right, and created it's created these euphoric waves. Like
Yeah.
that's the difference between gold and bonds. You can't really get euphoric about government paper.
Yeah, no. Every time bonds get euphoric, they get shut down by some sort of stimulus.
Right. So, um, I think that the key here is that gold will have these speculative waves, and it's not to say gold is shit asset or garbage asset. It's definitely something that needs to be respected in terms of, trying to short melt ups like this, idiotic. Don't do it. You're you're basically stepping in front of a steamroller where you're gonna pray that the steamroller runs out of gas before it hits you. Like it, that's all you're doing. Um, Everyone else that has a charting platform is doing the same thing. They're looking for, the blow off top candle, the exhaustion candle, the long upside wicks, trying to get their short orders in. And as I was saying earlier, unlike meme stocks, there's only two assets to chase here in precious metals. Two main assets, gold and silver. Yeah, there's these other metals, but they're not, you could even talk about industrial metals like copper, but really gold and silver are the main ones. And that means all the focus is on two tickers. Like when GameStop's ripping, it holds all. GameStop's not a major macro asset, so the viewership is already lower. And then you have one stock across many that are ripping. Viewership gets diluted again. When it's gold and silver, and these are big macro assets, a lot of eyes are on these. That's why SLV can trade nearly as much dollar volume as the S&P 500 ETFs because everyone's just glued to these tickers.
Yeah. Eventually it's going to come to an end, unfortunately. But
Yeah,
when that happens, who the fuck knows?
yeah, no, and the question here that you have to ask yourself is like, are you irresponsibly long gold and silver? And this comes from individuals like us that gold's a gold is now a factor in our models, but we're not necessarily perma anything. We're not perma long anything. We're along things over periods, and gold has seemed to have done um, the unbelievable the last couple of years, which it's good for those that are long. And I don't want to say that you need to manage your position a certain way, but what I will say is this: if you're irresponsibly long gold now versus 18 months ago, take a step back and understand what has changed. A lot of hype has come into the gold trade and silver trade, yet the macro hasn't shifted too much yet, at least in favor. Maybe gold's forecasting something. Something's going to break soon. That's a possibility, but I think we're leaning on the side of speculation control now more than like the macro is not in control here. Speculators are, and that's something I think that needs to be you need to be careful with. You
Yeah.
know, the normal gold bull will just say, "Oh, it's the end of the financial system. Like gold's going to go to 10K." That's probably the response. That's probably what the replies on YouTube are going to say. But understand that for that to happen, I think major damage needs to be done. That signs of which are not have not shown up, at least not yet.
Yeah, like right now we're in a position where like if there actually is a financial crisis, a recession, then tariffs are going to get pulled back. You're going to have all this stimulus, all these tightening aspects that get taken off the table. Bonds, if there's deflation, bonds are going to start doing better. There's going to be capital flight back to America because if America goes down, the rest of the world goes down. Unless we go years with these tariffs in place and the world actually does stray away from America. But as it stands right now, if America goes down, the rest of the world goes down and they're going to be flocking to dollars. That's just how it works. So I don't
I
see how gold is going to properly hedge against an actual recession at the moment, as it looks at the moment.
Yeah, I think again, the breakdown here or the disconnect is equity market should, if this was common base debasement, equity market should be melting up too. This
Yeah.
seems to be more of like an anti-US. There seems to be a theme going on, and that this is what gold has been running, this anti-US theme, right? That's really what gold is telling you. Gold is telling you people just want other reserve assets outside of U.S. Treasuries. Yet they're not forcefully liquidating U.S. Treasuries. They're maybe China, for example, is diverting cash to gold, or and along with speculators mixed in between, sends gold price up, sends the price of gold up. However, I think to say that the world's going to be able to detach from America is, I've always been against this idea because I think that for that to happen, a few things need to happen first. For example, the United States of America controls the entire world's technology, from internet, advertising, hardware, software, essentially almost all of it, outside of maybe like the mobile phones, Samsung, etc. Right? But they're all run Android. So it's like everything is run, I think, for the most part by U.S. tech and U.S. capitalism. Now there are some other competing car makers out there and things like that, and hardware globally. But I think that if you look at it from like who controls the who controls the internet, you'd say Google. Who controls advertising? You'd say Facebook, Meta, right? Like these are all U.S. dominated companies, and same thing with who controls the premium phone industry. You'd say Apple, right? And premium hardware, at least Apple in America, and and globally. And I think that divergence there, that between the themes of derailing U.S. Dominance globally, has to coincide with a replacement of our mega cap and basically corporate leadership across the world. Like if there's a different social media platform across the world that's not being used, if there's social media companies, advertising companies, search engine companies, uh, hardware companies, SaaS initiatives that originate from outside the America and they start to dominate, I think that what that does is it takes pull away from the United States. And the simple way to think about this is as follows: a country's as smart or as strong as a country's as strong as its smartest people. So if you have the top tier corporate agencies of this planet operating in America, they're going to demand the most intelligent people, right, to come into the country legally, ideally, right? And in that scenario, you're essentially exporting the global intelligence and importing it into America. And I think that the dynamic here that needs to be understood is if you're running this rate of basically importing intelligence and in turn exporting duopoly, monopoly, corporate control to the rest of the world, as long as that is in place, you can't really say F the Nasdaq or F the S&P 500 because essentially they have no competition. And if you look at the European Union or Japan, China, you look at their indexes, they don't have the corporate structure or the corporate structures or the corporate market cap dominance that we have in America because their companies are literally number one, their exchanges or politics are not trustworthy, or their companies just aren't innovative or large. And the issue I think here is that people are trying to take gold as a signal to take a stand away from America and turn their back to America and say we don't need America. But you know they're posting on American platforms, they're using American software one way or another. They're essentially still tied to the hip to the U.S. economy, and therefore, if they don't detach, it's very hard to take these mega caps down. And therefore, the market dominance globally down. So I think it's very hard to say the end of U.S. capitalism is amongst us when the entire world runs on it.
Yeah, and that just kind of brings home the point of if America goes into into a recession, the whole world does, and
Absolutely.
there's really
Yeah.
no escaping that. And so a lot of these theories that people have, where they say, oh, for example, no one's going to buy U.S. bonds, something that happens during every recession. That's more likely than not still going to happen as long as America is the superpower.
Yeah, and the only reason that America can operate the way it does with tariffs, like, okay, America can have Trump has the leeway with American politics and trade authority because America is America. If Trump was Cambodia or Colombia and decided to do this, it wouldn't work. If he was executing these trade policies as the nation of, let's just say, Colombia, you think he could pull this off?
No,
No.
absolutely not.
Right. He has inherent leverage because America's America. And that ability or that position allows him to do certain things that would fly nowhere else in the world. And that just goes to show you that if America's economy can still expand while he's doing all this, there's power to the American economy that supersedes tariff authority or anything like that. And I think that on a long enough time frame, you're going to find out that the first recession, any sort of economic trouble that comes along, and it's even assumes the tariffs are exacerbating the issue, they're going to get cut immediately.
Yeah,
It's
absolutely.
the easiest form of stimulus that you know. It's the simplest form of stimulus that you have. You don't have to print any money. You don't have to, you don't have to blow out your deficit. Well, I mean, inherently it's going to weigh on the deficit, but you don't have to, print money or ease rates or wait for the Fed to act. You could just cut tariffs overnight. So I think that's probably the first line of defense in case of economic hardship. But again, as the market's near all-time highs, we're not melting up like gold. So something's obviously different um, with gold and silver compared to the broad-based U.S. asset prices. And the world is going to try and make a turn away from the U. And this may go down in the history books as the attempt where the world tried to de-dollarize and they couldn't, quite honestly.
Yeah. I mean, if you look at like emerging markets to the S&P, it's been rising. It's been rising decently. Is that going to
Yeah.
hold? I mean, history history is not in favor of that holding.
Yeah, unless the US dollar again implodes, weak dollar policy should help EM just because of the currency differential. But at the same time, what are you really buying outside of America? Like if you really look at like the revenue dominant companies on the planet, all of them, if not most, if not all of them that come to mind are American-based companies. Huge subscription revenues, huge, you know, reoccurring business models that either one sell products or software on a recurring basis. Um, those are American-based companies. And until that changes, I just find it very hard to believe that you're going to just turn your back on America. Like you could turn your back on America and not buy U.S. stocks and buy gold, but if you're still using U.S. products, like the companies are still going to earn, you know, they're going to earn revenue. And I think on the flip side is you can have this kind of weighted vest on equities, which is I think what we've been seeing, where you essentially have less inflows for foreigners to buy U.S. stocks and more towards gold. And I think that dynamic there is not necessarily the cause of hyperinflation, but it's the cause of this de-dollarization effect. And I think that what that is telling you, in simple terms, is I would bet that if gold isn't melting up, I mean, if stocks aren't melting up the way that gold is melting up, and there isn't hyperinflation, there's a reallocation of capital placement. And I think that in a scenario like this, people are essentially swapping one risk asset for another, which is why we tend to think that the way gold's been moving is more of a risk asset, less of a store of value in the old traditional sense, which gold eventually will trade like again at some point. But I think if you're claiming I'm not going to buy US stocks, I'm going to buy foreign stocks and gold, because this idea that you're not going to buy bonds doesn't really make sense because bonds actually don't aren't blowing out. So it's like this idea that no one's buying bonds and bonds are taking flight. You look at the yields, they're not signaling that. So people are still buying bonds. So again, it almost feels like this risk structure has changed on gold, where people are trying to allocate, or people are allocating risk on a capital towards gold.
I mean, you can even see it just from today how the metals were selling off with equities, with risk assets. So
Yeah,
there
yeah,
is there's definitely a correlation that's been building over the
Well,
last few
well, there has to
days.
be. There has to be because what happens is if speculators are in control, right, and they start getting margin called and liquidated. If you have a lot of late leverage longs, right, and they're getting liquidated, and now their margin calls are coming from metals, which is the more volatile asset. What happens is you get corresponding margin calls with other risk on it. Like, you know what I'm saying? Like you're gonna, okay, if I'm getting liquidated on my silver short or silver longs leveraged, well, maybe I'm gonna get liquidated on some other assets too as I get margin called.
Yeah.
So I think that's probably the precious metals are more of a risk to the equities than I think a lot of people like to say they are. Not that they're gonna fall in tandem, but if they fall together, I think precious metals have the ability to cascade easier. Again, given that it seems to be one giant trade now,
Yeah.
and I wouldn't be surprised at some point if bids and flows start showing up again for U.S. Mega caps and U.S. stocks because again, at the end of the day, you can boycott the stocks, but if you use the products at the end, you're still you're still juicing the company. Thank you guys so much for listening. If you have any questions, reach out to us on X at the Market Radar or go to our website at market-radar.com.